When we think about what happened in the market is broadly flat from the beginning of the year, but it was a pretty interesting month by month performance. So in January, of course, we had a very, very strong rally. Growth stocks did quite well. February was a much more negative marketplace, and then March is sort of indeterminate. We've had a lot of sort of up days and down days. I think there's a bit of a refocus on politics. Overall, performance has been generally flat, and a little bit of currency volatility thrown into that mix. But generally, we've ended up with flat performance for the market overall. When we think about growth, remember we're always valuation focused. So emerging, secular, or structural, it's always going to be about valuation. We also want to be very open to where we find growth. So we have a proprietary model that we use that really helps us narrow down a very large universe. We also access our central research teams. And then we do a lot of work ourselves with companies that we meet either here in New York at Clearbridge or around the world whenever we're traveling. So there's always there's always an openness to finding ideas wherever they may be. If you look at the portfolio regionally, where we really drove the bulk of our performance was in two major areas. One was in Japan, the other one was in Europe. So both of those are relatively significant in terms of total market size, but what really led the portfolio was the stock picking in those particular markets. The Japanese market, although the currency was strong, the market wasn't particularly strong, but we had very strong stock picking. Yes, Shiseido was very important to us, but it was also very broad-based around some other consumer staple names we own, as well as some industrial names as well. Europe has also been very good for us. It had been good for us last year. That continues, ASML being one of it. But again, very broad-based performance around different segments, not just in technology, but also industrials. Financials have been very strong for us, again, continuing from last year. What we like is to see this sort of very broad base of performance around multiple sectors rather than just see one particular segment work. Last year, we did get very good performance from currencies, and we would expect to get maybe not quite as high a contribution, but where we do think we'll get contribution will be from earnings revisions, which will continue to be stronger, and then multiple revisions behind that. So we think there will be an uplift from currencies, but there will also be an uplift on earnings and multiple, and we think that can continue to move markets like Europe forward, as an example. Japan is also a market where we think corporate governance is changing. Really, it continues to improve from the initial stages in 2013, and we continue to see companies that are really striving to actually outperform some of the regulations that are being set in the market, and we would expect Japan to continue to do very well. So we do think that you will see good performance from emerging markets. We think you'll also see good performance from those emerging currencies as well. So again, from very low base, you have depressed earnings, you have relatively attractive multiples, and you have a good setup with currency. So we're very constructive on emerging markets.